Hey folks, Dan Frio here, the Mortgage Update. Today is July 8th, 2020. So what we want to talk about today is rates continue to get a little bit better. Maybe it depends on what bucket you fit into. So again, if you're a client of ours, don't worry, we got your best interest in mind. I'm going to go through in a second what we're tracking for today. No real economic news came out today that should really affect anything. Sorry, my mic is so close today. I don't know what's going on here. I'm just having a bad day when it comes to cameras and everything else. I got a brand new Canon M50, and I can't link it today, and it's just one of those days. We all have them. So the next thing, I had a realtor on. We did a Zoom meeting, and I'm going to post that on Friday, giving an update of people in the Chicagoland area, what's going on with housing prices there, and we go over some things, some houses they have for sale, and a great person to use if you're in the Chicagoland area. But the biggest misconception, and he even brought it up during the interview that I had with him, is down payment. A lot of people still think that you need 20% down. And, my discussion with him, and you'll see this on Friday, is I've been doing this for 32 years, and I don't even remember when I first got into the business needing 20% down. So I'm going to go over a couple programs with you that show you that you only really need, unless you're a veteran, and if you're a veteran, God bless you. Thanks for doing what you doing. If you're past, present, or future, thank you. Thank you. I can't thank you enough. I mean, you guys make it, you guys and girls, sorry, us to have the ability to do this, do what we love, and the freedoms that we have today. So that being said, if you don't have, you're not a veteran, you can buy a house, believe it or not, with 3% down. 3. And if your credit scores are a little bit off kilter, you can get 3.5% down. And then we got a brand new program that's came out. We have it available right now. If you need down payment assistance, we'll actually get you a loan for the 3 or the 3.5% you need as a down payment. So basically all you would need is some closing costs to get into a home. And I'm going to show you those guidelines. Today I'm going to go over all those guidelines. So without further ado, let's get on to the guidelines and the rate update. So what we saw today is the market opened the day down, believe it or not. And for those newbies to the channel, for those that are with me every day, thank you so much. But I'm going to go through this real briefly for the newbies. This number, and I always say, here's my biggest thing on this. Green is good, and that is up. Red is bad, and that is down. So the best way to look at this, green, good, up. Red, bad, down. So when you see green, good, up, that means rates are good. Rates got better. Prices went up. So green is good. Rates got better. Red is bad. Rates got worse. So that being said, we had a good day in the market today. Oh, you just saw it. You just saw it moves from 6 to 8. This is how most of the people in the background, you might have called a mortgage company this morning and they're like, oh, here's what I can quote you. If they don't do this, and they're probably, if you ask them, hey, do you follow the MBS market? They're probably going to look at you like, deer in the headlights. Most of them probably don't even have an idea what you're talking about. That's not good. I consider myself a mortgage advisor. Why? I advise you on all this stuff. I tell you when you should lock, when we shouldn't lock. I take a lot of applications, just say, you know what, here's what I'll do. I'll guarantee you this rate, and I'll promise you I'll get you that or better. And that's kind of where I leave things. And I'm a man of my word. I'll give you my word. I'll give it to you in writing. Whatever you need from me, to make you be able to sleep at night, I'll do that for you. I promise you. So we were up today 8 basis points, which is good. I mean, there probably wasn't enough movement in the market to really change rates, but it's a good direction that things are going on right now. The pattern that we're following, and this is why I really haven't locked anybody in for the last week or so, unless you're closing within the next 5 to 7 days. Look at this trend. It's not huge, but it's a nice trend on what's going on with rates. Okay? Again, up is good. This is the price of a bond. As the prices move up, yields, mortgage rates, interest rates, whatever, move down. All right. The economic calendar today was basically stagnant. In the employment rates, all this other stuff that we normally follow, we kind of chucked it out the window for the time being because the Fed is what's controlling the markets right now, good or bad. I won't say, but they're doing a fantastic job on stabilizing the mortgage market right now. All right, so that's the basis of what we're going to talk about today in rates. If you want to check out my rates compared to everybody else's in the country, tune into yesterday's show. Every Tuesday I do what I call it a mortgage update, the rate update show. And we go over my rates versus rates from all over the country. So check that out. So let's get into some first-time homebuyer programs. Here's a program that we offer. It's Freddie Mac Home Possible. Fannie Mae also has, it's called the Home Ready program. That's irrelevant. Basically, what you want to watch is right here. And this is the financing. So if you're looking to buy a property as your primary home and you haven't had a house, this program is you cannot have another house at the time that you purchase this one, meaning this will be your only primary property and you have no investment properties. You can get away with 3% down. How do we figure that? Well, when the LTV means loan to value. So it's the loan amount divided by the value of the property. So a 100,000 loan amount with a property value of 100 gives you 100% loan to value. 50,000 loan on 100,000 value, 50 divided by 100 is 50%. So that's where that comes into play. So you can get away with 3% down if you're looking to buy a 2 to 4 unit building. Look at this. This is crazy. 5% down. Normally when you're buying a multi-unit property, most of the time it's an investment property, but you usually have to put 10, 15, 20% down. You can get into this with 5% down, okay? The credit scores required are 620. So that is the Home Possible program. And it's the same thing with if there's Home Possible and Home Ready. Those are two programs that we offer here at Preferred Rate. Our parent company is American Pacific, so that's why you see that up here. So let's go to the next charts that we have. This chart here is the FHA programs that we offer. Now, one caveat. Here's normally is, 1 through 4 unit. And this in the FHA program's fantastic. Again, you can get a 4-unit building. It's got to be your primary residency with 3.5% down. Again, the loan to value is loan amount divided by the value. So in this case, you need 3.5% down. Right now, the only differentials that we have, right now this is saying a 580 credit score. We, along with almost every lender in the whole country, have bumped this up a little bit. Because we're having tough time servicing loans under 600. So we now have a 600 minimum credit score. Most out there right now are 620 to 640. So we have among the lowest credit scores in the business right now. So if you've been turned away from somebody because you don't have a 620 or 640 credit score, please let me know. I would love to help. So that's the FHA program. Again, 3.5% down. Let's go to the next program, VA. Now, if you're a veteran, God bless you again. Loan to value, 100%. Right here, you're going to see it. Zoom in on it. Again, right here, any government loans that are out there, which is FHA, VA, and USDA, where we are requiring a 600 credit score. Most everybody out there in the industry right now is at 640, 680, or 700. So we can go 100% financing on a VA property. Now, for those that just don't have really much money set aside, we have a new program. It's the down payment assistance program that we have. It's called Chenoa. All right. Credit score needed is a 640. There are some restrictions, and it's based on your income. And that's I'll be able to provide that to you. It varies by your zip code, so I can't really say here's here's the maximum or the minimum that you need to make, and as well as or for income. You'd have to give me a call. We go through your information, and I can tell you if you qualify for that or not. What this entails, we will give you the 3.5%. It's actually one underwrite and one closing. We'll do the FHA standard program with the 3.5% down, and then we'll do a secondary loan for you up to 3.5%. It's based on a 10-year term. So there is a small payment that you have to make for 10 years, but it'll get you into house basically with no money down. So that is our Chenoa program. We also have state-specific programs available for you. So if you're interested in anything of that, usually the credit scores needed for those programs run around 640 and or higher, and they have income restrictions. So please call us to find out, if you qualify for that. I always have somebody on staff. If I don't answer the phone, somebody will. If it's during usually about 8 o'clock in the morning till about 6, 7 o'clock at night. Many times after that, we will return your phone call as well. I always ask people to give us a call first, 844-775-5626. Number's right here. Go to therateupdate.com, and you're going to find all this information here. I got a new website coming in about 2 weeks, along with an app for your phone and a whole bunch of other digital footprints and everything else. And I hope to have a little bit better video quality soon, because I just upgraded all my stuff, and I got a whole new slew of stuff for my office to make it a little more appealing in the background for you. But that being said, give me a call. You can reach me personally at this number, or shoot me an email at dfrio. It's F-R-I-O. So dfrio at preferredrate.com. So one of three ways. Go to therateupdate.com. You can click the Apply Now button right here. Give us a call. Reach me personally at 844-775-5626. Or shoot me an email at dfrio at preferredrate.com. So that being said, I hope you liked the video. I hope we could be of benefit to you. Now that, there's a lot of people out there right now looking to buy homes. In the Chicagoland area, homes on the market went up. There was a 42% increase year over year of homes being listed, and most of those are being gobbled up within about 5 to 7 days. So if there's something you like, you got to jump on it. How do you do that? Well, the first thing you got to do is get pre-approved. So no matter where you are in the country, if you need to get pre-approved, we can get you pre-approved usually within half hour, 45 minutes. If you don't have a realtor, we'll help you get a good realtor in your area. And that's what we provide. We'll provide the one-stop shop servicing for you. We're here to help. I hope you like the video. Don't forget to give me a thumbs up. Please subscribe down below. Click the bell. Make sure every time I post a video, you at least get an alert. Check it out. See if the topic's something you want to see. And what I always ask too, please comment down below. I get a ton of comments, but I keep telling people, I'd love to help you, but I need you to apply. I need you to apply somehow. Give me a call. Go online. Shoot me an email. They post on YouTube down below. But it doesn't really go any further than that. So please, at least give me your phone number. I'll call you, but I don't really want you putting your phone number on the YouTube comment section, because you might get pranked. So that's why I would say, hey, here's my phone number to call me. Here's my email address to get me. Here's my website to go there. As soon as you apply one which way or another, I promise we'll get back with you as quick as we possibly can to walk you through step by step on how to do things. So take care. God bless. Thanks for watching, and I'll see you tomorrow. Bye-bye.